afternoon from Los Angeles, and welcome to Stock Market Today. On today's show, we're going to be taking a look at Tesla, everyone's favorite or maybe not so favorite stock right now, as well as a look at Paylocity and Burlington Stores. But we begin with a look at the major indexes. It's Alyssa Coram here with Ed Carson, and today we did see strong gains for the Dow and the S&P 500 up over 1% each. The Dow actually closing up 1.7% for the day. The S&P up 1.1%. The NASDAQ lagging a bit, though, finishing up 0.4% for the day here after a very strong session yesterday and adding on to those gains today.
Yeah, I mean, it was sort of weird after 2 days of, it's hard to believe, but a couple of days after the market had gone under pressure and we're all worried about the coronavirus, the NASDAQ had hit record highs. We went to newer highs today, strong open, but it came back down. Tesla sold off, and we'll talk about that more, and Paylocity sold off. A lot of software names, a lot of growth names had a tough day. Now, they've obviously been doing very, very well, but it was a down day for that. But still, the overall market still looking very strong. Really, hitting close to the top of those channel lines. S&P almost hit a record high today. So. Yep. Overall, still looking pretty darn good.
Yeah, it is. Well, one stock that's not looking quite as good as it was in the last couple of days is Tesla, with that stock losing about 17% today. Heavy turnover, but Ed, this comes after an explosive move to the upside. I mean, yesterday we saw the stock up as much as, 50% or so extended above its 10-day line or something like that.
Yeah.
Just a crazy upside move.
Yeah, even after yesterday sort of coming off the highs and then today's huge drop, we're still, you can sort of see that line up there. There's a line, it's still like 10% above its 10-day line. I mean, it's like it could fall quite a bit and still not even be breaking its short-term trend line. It could fall a lot further and still not look that bad. I mean, it's just a perspective. This is why we say don't be buying when it's like that extended. Yeah, if you had bought it at 600, you'd still be happy now. But there were a lot of, this is why you want the odds to be in your favor.
Yes.
If you're buying that far up, it's just dangerous. There were people, and there was a lot of reports, a lot of people on Robinhood were buying. And again, that's, it's sort of a signal. It's not just retail investors, but perhaps maybe more inexperienced investors. And, they're buying at the top when everybody's saying bye-bye. It was on everything all yesterday. Well, I mean, it just doesn't mean it's terrible or anything. It's doing great, but man, you just don't want to be buying there.
Yeah, I mean, it's like you said, it's all about timing. There's a reason why we look at these chart patterns and breakouts and earnings gaps and things like that. But Tesla going to meteoric heights here. So what's next then? If you're watching this stock, you want to see a base pattern form. You want to see that next proper entry, right?
Yeah, and then that will probably take several weeks to take, and you just need to see and waiting for it to set up again. Take it like a pause, take its temperature. It may fall further. It may have a lot of volatility. Maybe a while before it sets up again, but you want the odds to be in favor. You don't have to buy this stock. You don't have to buy this stock now.
Right, exactly. All right, and moving on, let's take a look at Paylocity. Out of the software sector now, it did beat expectations and provide really strong growth on the top and bottom lines. Earnings up 57%, so really strong numbers here. But the stock falling almost 9% for the day. But it's after quite a big run up, and we've seen the software sector, coming off of its big run.
Yeah, I mean, Paylocity is important because it was one of the very first big 2019 software winners to come back, because a lot of them had really big sell-offs in the later half of 2019. Well, this one came back. It broke out in late 2019, then it broke out again first day of 2020. So it kept on moving. So it had a big run, as you said. So it fell off. It's still above both buy points, so in that regard. But this is why you have to be careful heading in earnings. Everything went well. There were some concerns about margins. But yeah, this was sort of an excuse for a lot of software stocks to come down. Today we have Paycom, which is in that same human capital management software space, and Twilio. They're reporting tonight. So how they do, it's going to be interesting because software has been really hot in 2020, especially even as the chips have, sort of stalled a little bit. But, this is why you just have to be careful going into earnings. Yeah,
exactly. So, I mean, especially if you bought coming out of that cut base breakout in November.
Yeah.
There was another buy point at 122.75 from the beginning of the year. it looked like it was extended to the level heading into earnings where it would be a good idea to perhaps take some off of the table, because just because the stock is a top performer heading into earnings doesn't mean it's going to hold up after the report. But we'll see where it goes from here. It did finish off the lows, but again, down 9% for the day.
Yeah.
All right, and last but not least, let's take a look at Burlington, another name that we've been talking about quite a bit on this show, continuing to rebound after a pullback to its 50-day or 10-week line here after breaking out on earnings back in Q4. So what do you make of this rebound here?
Well, we saw that, and we saw a lot of other of its peers and other discounters do well today. I mean, partly it could be a shift away from growth into this, so that could be somewhat temporary. But look, it had that nice breakout in November. It actually set up in a tight pattern and broke out, but almost immediately rolled over. Well, it's reclaimed its 50-day line. That by itself was sort of buyable, but it actually today, I think it got above sort of that 4 weeks tight buy point, which sort of gives you another entry. That buy point wasn't invalidated. So there's a couple reasons, that you could say you could buy this stock, and it could be forming a new consolidation based off of the old high. So it's just been doing well. This is not going to be as wild and crazy, though it does have some big days both ways,
right.
But it's not going to be this massive mover like a Tesla, but it may not stop your heart like a Tesla either.
Yeah. All right. Well, we'll be keeping an eye on that one and see where it goes from here. All right, everyone. Thanks so much for watching today. And you can catch in-depth analysis every morning on IBD Live. It's our live stream that's interactive with our top minds here at IBD, walking you through the top trades of the day, actionable insights, educational tips, all to help you get your edge as a trader. Check out all the information on that at investors.com/IBD Live. And we also have our weekly podcast coming out for you tomorrow. Investing with IBD has a new episode every Thursday, so make sure you're keeping tabs on investors.com/podcast for when that comes out tomorrow. All right, Ed, I think we're ready to sign off here. We'll see everyone right back here tomorrow.